Hey guys, today I'm going to reveal the best trading setup for investors. The investor can be short-term investor or mid-term investor or long-term investor. For any investor, the method of trading is same. So this is going to be the best trading setup. So you don't need to spend lakhs of rupees on getting trainings from fake trainers or researching lots of time, and you don't need to waste your time on researching. So this is completely designed with my last 8 years of research and experience. This method is universal method. All the markets, major investors follow the same. So don't ignore this. For short-term investors, primary time frame we need to analyze is weekly time frame. We trade in weekly time frame, but the stop loss we'll maintain in hourly time frame. The holding duration will be around 1 week to 6 weeks, and sometimes we need to check the nifty direction as well, otherwise it may impact the stop loss. For midterm investors, the primary time frame is monthly time frame, and the trailing stop loss will be on daily time frame, and the duration of holding will be 1 month to 6 months, and it won't impact much. For long term investors, primary time frame we have to check is quarterly, which is 3 months time frame, and the secondary time frame will be weekly time frame, and the holding time period will be 3 months to 2 years, and the impact of nifty direction will be almost negligible. Method of entry will be based on the swing breakouts in primary time frame, and the candles forming are riding on the upper Bollinger Band. Let's see an example for short-term investors. This is Adani Energy Solutions. This is already on weekly time frame, and you can see the recently it took breakout on 6th April on weekly time frame. Let's draw a line where it took breakout, and now let's check the Nifty direction as well. Nifty direction is also upward trending from 6th April almost. You can see that trending on upwards and hourly time frame. Let's check Adani Energy Solutions in lower time frame, which is hourly time frame, and then we'll see how it is moving. You can see very clearly that it is moving like higher highs and higher lows. Before an entry, I always make sure that the recent swing is broken, along with candles are forming above the Bollinger Bands, so that the movement will be aggressive. The best entry will be in lower time frame. So let's go to the hourly time frame and see if any candle is forming above this breaking line. So we can see that this is the best candle or this candle, either of that you can choose to enter, and then whichever the candle closes below of this breaking line, that is your initial stop loss. So you have to come out once it is broken, if any candle closes below of this line. Otherwise you can just keep trail the stop loss by applying 50-day moving average. Until unless this particular line is broken, you can keep holding it. So you can see that there is a breakout of that line. Sometimes there will be a chance that you might have missed the breakout and it might have already started moving. So at the time, if you wanted to enter in between the trend, then there is an option for that. Let me show that. Let's go into the lower time frame. For example, if you fail to enter here, Sometimes you may fail to enter at the starting point, but you might have noticed somewhere here. At the time, you can just draw the swing lines for each and every swings, and then you can enter wherever the swing starts in lower time frame. For example, here you can start, or here you can start, or here you can start. But wherever you start, you should make sure that the recent swing line is not broken for the stop loss. Or else, if you wanted to keep the broader stop loss, then you can apply the 50-day moving average, and you can keep the stop loss on 50-day moving average itself, so that you will follow only single stop loss. Both will work, but this will be a quick stop loss exit. Always the recent swings will be tested again and start moving. Now let's see how much returns it has given within 4 weeks. More than 33%. Within 1 month, most of the stocks, if they give weekly breakouts, they give starting from 10% to 40%. Now let's see an example for midterm investors as well. It is same method, same thing, just time frames will changes and holding duration will change. This time Nifty direction will not impact much. So it's just another example with different time frames, but method is same. I will not go into details, but I will show you one example. So the primary time frame is monthly time frame. Let's see where it has given the breakout. You can see the breakout happened around May and gave returns around 225% within 7 to 8 months. As per the swing, PFC has given the breakout here, but it could not give much momentum until it breaks all-time high. That's why I always recommend to draw a line at all-time high for any stock who are looking into mid-term investing and long-term investing. So this option is compulsory for mid-term and long-term investors, whether the stock has broken all-time high or not. That's why I purposely I took this PFC as the one of the example. Now we'll go into the monthly time frame. So this is the breakout along with the swing. So swing breakout is compulsory along with all-time high. Along with other options, candles should start forming above the upper Bollinger Band. Then only we can start getting the confirmation on the breakout. Now let's go into the lower time frame for an entry. You can clearly see that the candle started forming above the line and taking the support of that line, and none of the candles started closing below of that line, just touched as a support line and then started moving upwards. And then you can start seeing how stock is moving with higher highs and higher lows with swings within the lower time frame. So this will be the final stop loss or a 50-day moving average, whichever comfortable you are looking. So you can see even if 50-day moving average is supporting the same trend. It took exactly support there. and this will be the final exit. Now let's check long-term investing opportunity. So again checking Adani Energy Solutions. So the higher time frame is 3 months quarterly time frame that we need to consider. Lower time frame is weekly time frame. Let's draw all-time high before the breakout. So this is the all-time high before the breakout and candles started forming above the Bollinger Band. Now let's see how much it has returned the investment. You can see 672% within 2 years. So now let's see how the entry is in lower time frame. So weekly time frame is the lower time frame. So this is the entry point. On this candle itself we can enter and then we can start trailing stop loss using 50-day moving average, and this is the point where we need to exit. So on the second or third highest point, it is better to exit half of the quantity, and on the fourth or fifth swing highs, it is better to exit full quantity. One of the biggest misunderstanding of stock market investment is people start buying at lower and they expect the stock to go higher. Never ever enter any stock which is falling. For example, S Bank. It was started falling from 263 onwards and then now it is 23. Always in stock market, you remember that we should buy high and we should sell higher. That is the key rule in stock market. The complete concept is analyzed and derived from Dow Theory, which is higher highs and higher low concept, which is nothing but swing trading concept. So swing trading is the ultimate technique that we can follow for stock market investing or trading. All the best, guys. Yesterday was my birthday and also wedding anniversary. So this is the gift for you all. Thank you.